Hello and welcome to, once again, the Short Vol Show, your #1 show for volatility trading and the VIX term structure. I'm your host, David, and my chair is going sideways, so let me fix it. All right, so markets in turmoil today, folks. What to do? It's been a tough ride for the last little while. Another big spike in UVXY. I mean, you could have bought UVXY for 46 and sold it for 66. You could have scalped $20 on it if you timed it right. I mean, with this kind of up and down movement, craziness, and the market's all over the place, and us continuing to go back and forth into backwardation, short term, there's not really any penalty for getting long UVXY. In a slowly rallying market, we caution people, don't get long UVXY, always trade to the short side. This stuff is just melting. But in this environment where everything is all over the place, it's just as viable to trade UVXY or VXX from the long side as from the short side at this point. Let's take a look at the E-minis chart, because that's the one that's most important as far as I'm concerned right now. And the reason I say that is because, of course, the VIX is derived from SPX puts, and thus the movement of the major indices really are the driver of everything. And so if we take a look at the E-minis, we see stuff breaking down. Let's widen it out a little bit more. But we really see stuff breaking down here. Let's see, 1 year chart. So here's the year chart, and we see really this low. Let's see, this low in October, which we haven't broken through yet, but approaching. And we're a little bit off the lows for the day today, but we've had more of kind of like a slow grind down. And, a lot of people, what they look for the bottom of this sort of thing is what they call capitulation. And capitulation is basically everybody panic selling, and a big violent move down leading to a big violent move up and a bounce. And when we get just this kind of like grinding down and then quick rally, then grinding down, quick rally, that seems to say that stuff is going to continue for longer than just one session or one day. And that's kind of where we find ourselves right now. And it's not a fun place to be if you're long a bunch of stocks. As I look now, I see Afria's bounced a bit. Another big day of down move in Apple. Facebook up a little bit right now. But stuff all over the board, really hard to tell what's going on. And so it's one of these things where you really have to reset and get back to basics with your trading. And remember that everything that happens in the market has happened before and will happen again. When there's like a situation that you haven't seen in a while or seen before, sometimes it seems like, oh, well, everything's changed now. But in the end, nothing has really changed. So, for example, volatility will come in at some point, and so there is opportunity on both sides of the vol trade. VIX right now, 22.26, was up above 23 a little bit earlier, almost got to 24 as we look at the VIX chart here. UVXY did get up to 66 at one point today. So this has been a painful move for those who have been short volatility for a while, because this move up over the last few days in UVXY from 46 to 66, that's a pretty big move up. But, there are opportunities to scalp in between here. We see you know, if you'd shorted something up, or maybe not at the top at 70, but what if you'd shorted something with UVXY around 60? You could have made a nice profit, covered, and then waited for the next spike and then sold again. Conversely, if you're playing from the long side, you can jump in here at some point when things are way, you know, several days down. You can jump in, and so there's been trade both ways. This is a trader's market, and so if you're in a funk over having lost some money in an individual issue or something like that, you got to try to shake yourself out of it, because there are opportunities all over the place here. Markets are cruising around, and there are opportunities to trade. This is a trader's market here. There's stuff going on. There's volatility. People complained when we were just going straight up that there was no volatility, nothing was going on, there's no action. There's action all over the place here, folks. I mean, Apple down $5 another day. Tesla yesterday bucked the trend, was up, now down. There's stuff to do here, but the thing is that if you make a play on something, you need to get into the trade and get out of the trade, because just leaving stuff on, the markets turn around quickly these days. So there's opportunities to scout back and forth is what I'm trying to say here. UVXY, you know, it could go back to 70 if we continue to grind lower. We are off the lows, like I said. E-minis were down at one point, I think 55. Now they're down 30 something. So we are off the lows on a high volume day, but things could roll over and just continue to grind lower very easily. There's no, you know, it's hard to put rhyme or reason into markets at times. It seemed like for a long time last year that the markets could do no wrong. Good news, bad news, indifferent stuff went up. Now it seems good news, bad news, indifferent stuff goes down. And you add into the picture that they're raising interest rates, so it's getting more expensive to borrow money, inflation, with added interest rates, it makes there's pressure on earnings for companies, and you see a setup where we could grind lower for a while. However, that's not to say that there aren't opportunities out there. UVXY and the VIX term structure, it appears to be just fluctuating back and forth between backwardation and contango. And so, but, you know, I certainly don't want to get caught holding the bag on this. The last thing I would want to do in the world is just be like long UVXY and get caught holding the bag. I'm very, very sort of fearful of that. But at the same time, putting on a big short delta and backing up the truck is not a great idea either, because we've seen stuff can, you know, this could rip to 75 tomorrow very easily. If we take out the lows from, what was it, October 9th, 10th, 11th, that area, if we take out the lows in the E-minis on that and head violently lower, volatility could go, you know, from where we are in the low 20s up to 30. It could happen. So stay nimble. Keep alive. You want to survive these moves and be profitable. So this is a new market for a lot of people who have just spent most of their trading career in the rally. So it's exciting. Just a note on the video yesterday. I got great response from yesterday. So thank you for all the views and all the positive response. I don't want to profit off someone else's misfortune, and it's too bad that those people lost money. I have been contacted by not only some of the victims, but also some of the representation, based lawyers who are trying to connect with the victim. So if you are a victim of that, that stuff from that video yesterday, do feel free to reach out to me, and I can put you in touch with the lawyers that reached out to me. Looking for, I want to thank my Patreon viewers for your support. Please consider giving a little bit to Patreon to help support me. It's the most direct way to support the channel. I want to grow my Patreon, and I appreciate all those who have signed up. I know it's kind of a drag to have to put your credit card info out there, but it's pretty simple to do it. It's secure, and it really super helps me out. Let me see if I want to list all my patrons for a second here, because I'm very grateful to you all. So let's do that really quickly. Thank you, Abraham. Thank you, Anthony. Thank you, Badresh. Thank you, Brent. Thank you, Brian. Thanks, Dave Sherman. Thanks, Jane. Thanks, Kevin Quinn. Thanks, Mark. Thanks, Mike Kaiser. And thanks, Seth. I really appreciate all the help from y'all. It's been a rough trading year for me, P&L-wise. And having that little bit of help to keep the channel going has been a great, not only to help financially, but also has been a great motivator to see that people believe in the channel and believe that it's worthwhile what we're trying to do here. So thank you very much to you folks. As we look forward, we're going into a period, remember here, folks, where there's a couple days off. So when you're running your theoreticals and your sheets and stuff, remember we're going to have a couple days in a row off. So generally what they do is they're going to start discounting option prices ahead of that time. The other announcement I have is that VMON is closing. So if you do have a position in VMON, I would recommend closing out your position, just because it's going to become less and less liquid. It's still very liquid right now, but it's going to become less and less liquid. And all positions, I believe, need to be closed out by November 28th. So get ahead of that one and close out of VMON, because it's the end of the road for VMON. Now, VMON, of course, hasn't been a big mover now that it's at such a low price, and I believe the company just really wasn't into that. They were kind of moving in other directions, is the inside info I got about them a while ago. So it's sad for me, because I've always had a good relationship with the company that administers VMON, and thanks to Scott and Greg for being there for me and for always giving me an inside track on what's been going on with VMON. So it's sad to see that go. I'm looking and hoping that we can get some more products as far as volatility products. I know the clearing firms don't want to clear like heavily leveraged, like I would love a 3 times leverage VIX fund, but I know the clearing firms don't want to clear these things, especially in light of what happened with XIV and the Vomageddon. That's kind of put a damper on any activity as far as new funds. Now, I did find a new mutual fund that's relatively new, which I'm attempting to look up as I talk to you right now. Last night, I was looking through, and I found a new volatility mutual fund that's only been around for about a year at this point. And so I thought that was kind of interesting. I suppose I will find it offline and talk about it later, because I don't want to waste your time now looking for this too much. But let's see. Oh, here we go. Okay, so ABR. So this is a volatility mutual fund, and let's talk about it for a second here. So this is a mutual fund, and what they do is they, depending on how volatile the markets are, they either have cash in bonds or in I believe it's VIX future shorting VIX futures. So let's see. It's called ABR Dynamic Fund. And I'm going to get more information for you on this soon. But it basically, it's a mutual fund. They haven't done a whole lot. It was obviously down this year, but it looks promising, and I will cover it more once I get my act a little bit more together here. We definitely need more products. It seems like all the products are disappearing in our industry. It's definitely been a hard place to trade lately, the VIX. So if you've been having a hard time with it, you're not alone. Thanks for watching today, and hang in there, folks. I really don't think this is the end of the down market, and so I would be careful and be limber. If you do put a short position on and it starts to go your way and you have some profits, I would say take profits when you can and reload. There was a great opportunity last week to, right after the midterm elections results were announced, vol really came in. There was a way to take off your short and reload, and today, with the spike up to 66, even around 64 here, is an opportunity to get short, which I think will work at some point in the next month. We will be lower than now, but we may be higher too. So the higher we get, the more of an opportunity there is to short this, obviously. And we do know that this is not like a stock. It's not just going to take off to the upside and never come back. It always comes back. So that in mind, be limber. I hope you all are doing okay. Any questions, please, you can put them in the comments, and I will get back to you as quick as possible. Thanks for watching today, and I'll see you in the next one.